Investors are failing to see what Bitcoin and the stock markets are signaling amidst a looming recession. Today, we have the short-term data to get through, the end-of-week stuff. The markets are now closed, except, of course, Bitcoin and cryptos, and some of the major news headlines that have fooled the masses yet again, specifically the US dollar. We'll show you that on the chart. And the thing that is so different between what's happening on Bitcoin right now after it dropped to 25,800 and the US dollar, that relationship is getting very interesting. So stick around, make sure you hit that like and subscribe button. This is your home of macro cycle analysis across the stock market, Bitcoin and crypto, and of course, the biggest of them all, the real estate cycle. Lastly, the shills for the top of the video description is TIA Premium. This is going up in price, so check it out. Link top of the video description. I'll talk about this a little later as there is some free trading workshops to get onto with that. But first up, let's start with the news overnight, the headline stuff that we're supposed to run around with our heads scattered everywhere because of what the US does. All right, so this is basically USD unemployment rate dropped again from 3.6 to 3.4. At least that was the forecast here. The previous was 3.5. So essentially around a very similar level. So when I talk about we get scattered with our thoughts when it comes to investing, is that we're told that this sort of announcement, these sort of fundamental factors are what is driving the market, or better still, how we should be assessing the markets and how we make our plays in the market. If you've been following the channel, which obviously I suggest you should, the TA is the basis here, the cycle itself, and then of course the technical analysis. And then we just have an idea of what's going on out there, like we have with these headlines, because they can really confuse the bottom line and where we are in the cycle. Same sort of thing with these sort of headlines as well. The past 40 years, smaller stocks have mostly underperformed. Now, if you haven't been following the stock market, absolutely okay. Obviously, we're here for Bitcoin and cryptos, but there's a new narrative every single day. And I think it's important to have a look at that at the beginning of the videos and just show you some of those news narratives that pop up time and time again. Because I see the comments from you guys, whether it's on YouTube or on Twitter or on Instagram, people are wondering what is going on when there are so many bad news headlines. And there's such a big one that happened in the US dollar just recently. So we'll get to that as well. But just to cover this one here, basically smaller stocks are underperforming. What we're told when the narrative is, when the spotlight is on this particular narrative that stocks have to be performing, is that if the smaller stocks are going down, it's assumed that it's a bad sign for stocks overall. Small cap stocks are considered a bellwether for the domestic economy and investors' risk appetite. So if the small stocks are underperforming the larger stocks, so your larger stocks like your FANG stocks, your Apples, Amazon, Meta, you name it, if they're underperforming, the small stocks are underperforming those, then they say that, well, the rest of the economy, the rest of the stock market is due for a major correction. And the data of 95 years says otherwise. This is very, very similar to an altcoin market, which I'll get into in just a minute. These are the small cap stocks. So they are the junk out there. So it's basically a riskier trade because you're trying to make bigger profits, bigger returns than the index itself and the biggest stocks, which have potentially already had their massive gains. Similar to the mindset of why you wouldn't invest in Bitcoin and why you would then go and risk all your money in altcoins. And so you can see a similar sort of thing here. In the first half of this cycle, from 1928 to 1982, so a significant period there, about 54 years, you can see that the smaller caps were performing better than the large caps. However, that was just through smaller periods. You can see that the major move happened in a short period of time, just these little periods. They are over multiple years, but we're taking into account here a 54-year cycle. And the majority of the move happens in a very short period of time. Does that sound familiar? You bet it does. It sounds very much like an altcoin market. And so when this happens, the money floods into it, typically at the worst times, right towards the end of the cycle. And then, of course, the major collapse happens. So all this is showing is that small caps are underperforming the large caps in this period of time. So between, say, like 1983 and all the way through to about 1998, 1999, then they the large caps underperform the smalls, and now we're seeing the small caps underperform the large caps again, and we're hitting some new fresh lows. I believe about 3-year lows here. So when this happens though, it's not necessarily a bad sign for the market. You're starting to see the small stuff get scrapped and people flooding into the larger caps, which are a little safer because they've been around longer. And you're seeing that hold the stock markets up and even push some of these stock markets to new fresh highs for 2023. And so over time, like you can see going all the way back here to the 80s, it's not a bad sign, at least for the last 40 odd years. And even if you want to bring in the last 95 years, you can see that it only happened over very short periods of time before the small caps underperformed again for a very, very long period of time. And in some cases, pretty significantly, pretty sharp moves to the downside. The stock markets are showing us these macro signals, the reasons why we aren't seeing further collapses in the S&P, in the NASDAQ, in Bitcoin, but we do see some of the crappier stuff, the small caps, the altcoins are still going down because it's that early stage, that first stage of the bull market. Now, just taking a look at the altcoins, we don't have as much data, of course, going back to the early 1900s. Not the case here, but we can go back to 2017. And if we had it to 2013, it'd be a very similar picture with the boom and the bust cycle. Altcoins outperform BTC during those bull markets. This is the total crypto market cap, excluding Bitcoin and ETH. And of course, now it includes a lot more stable coins as well. But the main thing we're looking at here are the big booms and then the subsequent busts where the altcoins underperform for a very long period of time. So it's nothing new. It happens in all markets. The risk appetite of investors starts to come back, typically comes back with the larger caps. And then as it gets safer, the markets start to move up. People start to flood into the smaller caps. This happens across every single market in the world. Real estate is no different either. At the beginning of those cycles, you start to see the major cities go up at the beginning, and then you start to see the flood of money go through to worse and worse locations. Well, let's say they're not as good as the larger locations. And this is just what happens through every single cycle. Once the money spreads through to the other areas, the less desirable sectors of the real estate market, then it even spreads through to the less desirable areas within those areas themselves. So to the major roads or to next door to a construction site or an area that you just don't want to be in within a suburb that you just don't want to be in. It's exactly the same thing across the board. And that's what we're seeing with the real estate prices beginning again with some of the more desirable places, and then it starts to spread. Next thing is the fear and greed index. We are looking at extreme fear exactly 12 months ago. This was the most fearful time in the market exactly 12 months ago. The 12th of May, 13th of May today, basically the 12th just ended. 3 on the fear and greed index. Absolutely wild to think 12 months later, we are now sitting at greed. And we've even experienced some extreme greed over the last few months in 2023. So times have changed a lot. You can see that the lows have gotten higher with the market sentiment. The prices have started to climb up. This was the market low, so the cycle low for the S&P, yet the sentiment was climbing at that time. Prices were falling, sentiment was climbing, divergence is happening. What are we seeing today for the S&P? Well, we've had a small down day, 0.3%. Yesterday was 0.1%. The day before, when we had some of those US announcements as well, the market was up there at 0.4. So we're basically all the way back to square one from a couple of days ago. At the end of the week, only down 0.4. It's very similar to where we were all the way back at the end of March. So nothing much has really happened except some consolidation at higher prices. You can see the amount of closes at these higher prices compared to where we've been the entire period of this transitional period, this bear market period. You can see the market holding up relatively well above some of these significant lows that happened in February, which is around that Russia war. And it is climbing and climbing. So this is the signal that the market is really starting to squeeze its way up, finding support at higher prices, closing at higher prices, nudging on the door of the upper side, yet there is a lot of bearish talk. It's what's called climbing the wall of worry. All that's happening now is we're slowing down towards the 50% level, whereas the NASDAQ still a little short of the 50%, but it is putting in higher and higher daily tops. Yes, we just had a reversal yesterday. However, look at where this bar has closed. This is the end of the move here on the 31st of March. So pay particular attention to that day there. You can see the small details here that the market is showing us. We draw an exact horizontal line there. Yesterday, the market touched on the top of that line. Now, we bring the line up to the next top. So right here, the market has closed above that line. We bring it up to the next highest point. The market's closed above that line again. These are some really subtle signals that unless you've been trading for a long time, you just won't be able to pick up because they're very subtle when you have to start looking at the tops of the bars and the closing prices as well. So put that into your toolboxes if you are looking to trade. You can use these on any sort of time frames. They're little subtle signals that are showing you signs of strength. And of course, the reverse happens for the signs of weakness when these things happen to the downside as well. More strength in the markets as we look at the US dollar. You might remember us talking about the ultra bearish news that was coming through in late March. So this was after that collapse of the banks, and there was a ton of bearish news coming through for the US dollar. Global superpowers unite against the US dollar. 6 big economies that are ditching the US dollar. All we heard about was abandoning the US dollar, ditching the US dollar, uniting against the US dollar, dethroning the US dollar. Malaysia enlists China's help to end US dollar dependence. So there was a lot of these words all around that time. You can see the dates here: 1 month ago, 7th of March, a week ago, 1 month ago, 1 month ago. So the talks still go on. But look at what the price was doing through this entire period. Here's March. Sure, you've got the collapse of the banks, but then you've got this entire period where there's just bad news after bad news after bad news. What happens? The market finds a bottom and we start to push up. The price where we just closed for the US dollar is the same as it was when all of this bearish news was going on. Potentially, we start to see a slightly higher price. Look at our 50% levels here, 103.5. That's the level that we're looking for some sort of reaction. Whether we break through, yet to be seen, but that's going to be a testing point for the US dollar around 103.3, 103.5. So it's just another sign that the news is so far out of touch, but they are giving the people what they want to hear. Through that period, the US dollar falling, all people wanted to read about was why the US dollar is falling. The fact of the matter is it already happened. Now the market's gone sideways and we get a push up. This is not a sign that we get a massive push to the upside. It's a sign that the low was coming in while the worst news was coming out. Think about what we did last year in September. Ultra bullish news at these tops. There was the euro collapsing. The Great British Pound was collapsing. We had parity with the euro and the US dollar. Everyone was saying buy US dollars. It's the strongest thing. This is the dollar milkshake theory coming out right now, right at the peak. But the dollar milkshake theory was actually out a long time ago. Nonetheless, the most bullish news came out at the peak. Guess what? Market collapsed from that point, from 115 to 100. Same sort of thing happened again. But I don't expect this rally to be anywhere near as severe as what this crash was. So I don't expect this rally to come up and take those tops out again. There has been a little rally. It's worked again. The news is not on anyone's side. They're just giving the people what they want to hear, not what they need to hear. Now, I mentioned in the intro that we have free trading workshops with the Investor Accelerator. The best way to get on board with those is to use these links down below in the video description. This time around, you can get some free USDT. If you are experienced traders, definitely go ahead, use those, and then subscribe to our free newsletter. We'll let you know when further details come out about those trading strategies. But like you can see from many of you guys, the viewers and our members, you're getting some really good results when it comes to learning how to trade, especially using mechanical strategies that we teach in TIA Premium. So a couple of things to do there. Use these links in the video description. Only using these links can you get access to the free trading workshops. And when that is ready to come out, that'll be emailed to you. So it's best to get onto the email list right up here, tiacrypto.com/subscribe. So we have Bitcoin and the differences that are happening here between BTC and the US dollar. We just had a push lower on Bitcoin, breaking many of these swing bottoms, many of the support levels here at around $26,500. But what is different today is that it closed higher. So I'm taking this as a subtle signal, not to say that this is the low, but we're seeing slightly different conditions to what we've seen in the past. So I've got here labeled some of the US bottoms, USD bottoms and USD tops. You would expect the bottoms to come out when Bitcoin is topping and vice versa. You got some weakness in the US dollar as it's dropping, bottoms, and there's some strength coming out in Bitcoin. Bitcoin's moving up at that time. But this time we see a higher close. Normally Bitcoin would be closing lower. If the US dollar is gaining strength, you'd start to see Bitcoin drop and drop and drop. This time it's a day in, but I want to just take some subtle signals here and see how this eventually plays out. Maybe we do continue to see some downside. That's absolutely okay. But we're just seeing some subtle signs at the moment with a much higher close. It's closing above the previous support levels. So you got here around that 26,600. You got this swing bottom here at 26,500. You've got these levels just at around 27,000, which is getting close to. We had a close at 26,800. So overall, this market has found its way back into the trading zone after 7 red days and a couple of major swings to the downside here. So these are the tops that we just saw on Bitcoin. The 2nd of February, there is the US dollar bottoming. The US dollar also had a minor bottom here, 22nd of March, and then that recent bottom for the US dollar on the 14th of April, where we see on Bitcoin, we had the top, we had the next top here, and the next top for BTC, all while the US dollar was bottoming. Overall, these are some subtle signs of strength for Bitcoin. It's still holding up above the previous resistance level, so another good sign there. And it's just coming back into the zone to test any sort of supply. Are we going to see more supply come into the market? Or are we starting to see more demand with diminishing supply so we can start to see a bit of a grind through here? That's probably the best case scenario now for the bulls. We want to see a grind, a boring market. People just sort of scatter away. The bears think they're in control, that sort of thing, before we can start to climb back later in the year. We've had a pretty exciting last 6 months. We have to have some boring times, so expect that in the near future. We've also got the crypto fear and greed index resetting as expected. Don't you love that call in crypto? But it's pretty much a straightforward thing here. If you get overexcited, then we have to have a reset period. So we're dropping back into the 40s, just as we have done over the last couple of days. Yesterday was 49, today it closed at 48. So a nice reset of the market sentiment is exactly what Dr. Bitcoin ordered. We need that for a nice healthy market. All right, guys, have a fantastic weekend. Check out the links in the top of the video description for TIA Premium and use these links for Bitget and ByBit if you want to get access to the free trading workshops and smash out some great profits like you guys are doing. Thanks for the comments down below. I'll see you at the next video. Until then, peace out.